There are multiple levels in which the InfraCredit case study is important. It depends on the audience sometimes. If I have MBA students who aren't very international, partly is to show them the level of financial sophistication that exists on the continent. When I talk with infrastructure investors, many of them haven't really thought of the ability to take in-country money and deploy that in in-country assets. So the case exists on multiple levels. One is for people who don't know very much about the continent and about infrastructure finance. The other is for infrastructure finance pros, particularly when they look at the ways in which a really thoughtful rating and assessment agency can help to unlock other capital. That doesn't always happen because some of the rating agencies just aren't as sophisticated. A lot of what we do in our case studies is have students discuss the issues in the cases, often by putting a decision in front of them, so they have to argue for or against whatever the protagonist might do. It's a lot different than just having a presentation and asking questions. So a lot of what we talk about is, in the event 6 years ago that InfraCredit got bigger, would the limiting factor be not enough capital, not enough talented people, or not enough deals? And there's always a lot of discussion back and forth about those issues. And finally, about how a development finance institution or the investment authority would choose to invest in a guarantor instead of directly in the asset. All those are the kind of things that we talk about. Do the students believe it or not? And further, if they believe it, could it be replicable? Can the model be copied in other geographies or other countries? So those are all learning objectives that get teased out when discussing this material in our case studies. The expectation that has been surpassed is a level of professionalism in the organization. So that's really nice to see, because when I was here 6 years ago, we were just starting out. When I first met Chinua Azubike in Lagos maybe 7 or 8 years ago, it was just an idea, just a concept. I thought that was interesting. And at the time I wrote the first case study, only one deal had been done. The Biathlon deal, which was, 10 billion naira, a small project, and it was a refinancing, it wasn't a ground up deal. And the entire case study was based on projections going forward. I was also pleased to see the way that the different investors and guarantors and clients had evolved. Even though some of the margins are smaller, even though some of the projects are challenging, there clearly is a need and an opportunity. So that was really encouraging to see. I think there are probably three components to that. One is, it's surprising how close to the path the company's been able to go. Some of the numbers are different and the pace isn't as quick, but essentially the vision or the concept has been proven. A proof of concept has been accomplished. That's excellent. Another thing that's interesting is that more kinds of credit like this are available in the country, whether it's a longer-term bond issued by a corporate or bonds that are purchased by insurance companies and pensions without a guarantee. That isn't necessarily more business for InfraCredit, but it's great, in my view, for the nation and for the capital markets, because InfraCredit has shown the path, has shown the way. And to me, that's something interesting about the company, is it's not just about what InfraCredit can do itself, but how they can show other people how these things can be done. That has a multiplier effect that we didn't really anticipate at the time. That's been really nice to see. The general outlook is that the local currency finance is still very young in emergence, partly because the asset pool or the capital isn't always assembled as well as it is in Nigeria, where there's a well-developed, well-regulated pension system run by independent operators. Many other places, the pensions are run by the federal government, and the federal government, shall we say, might invest for policy reasons, not necessarily for return reasons. Generally, though, for foreign investment. So what they're looking at is to mitigate exchange risk and to think about traffic risk. The idea of emerging with a volatile currency to be able to collect money in Naira, build the projects in Naira, and replenish them in Naira is still novel elsewhere in the world, in their own local currencies. So in that sense, I still think InfraCredit is a trailblazer in that regard.